Morning traders, it's Simon here with your weekly review. So this week I'm going to look over the monthly charts just to give you some idea and perspective of what's going to happen in the next couple of months or so. So at the moment we're looking at gold at the moment, and very basic. I've got $1,200 as a kind of bottom level here. I know there's a couple of lows before that, but we had in the past some decent levels there, which is quite nice. And we've got 1550 here, where you got one touch here in the daily chart. You had 3 touches here as well, another touch there. So for me personally, this is the area where we're looking now for some form of confirmation to prove that now we need it to come back down again. So you're looking for some bearish patterns right at the moment, because I just feel the gold will need to pull back down a little bit. There we are. On the weekly chart here, I'm making lower highs here now on the weekly chart as well. That's on the daily chart, sorry. Weekly chart does help if I get the right one. There we are. You got some tweezers there, sorry, at the top there, and like we just see on the daily chart, you see it moving down a bit. So if you got any move down to about this level here, extreme as it may be, 1360, that'd be quite nice. That means we got this whole entire move up, then come back down again. Weekly 50 MAs around there as well. So I'm expecting the next at least a couple of months, really nice to see a pullback down there. This is an excellent buying opportunity around 1360. Do we get there or not? It's hard to always tell. I mean, but it's a big, vast area there to move back into, but it's not been unknown to drop back down there like instantly like that. And likewise here as well. But we have seen in the past, in the last gold rush in 2011, where we didn't really do any testing and just carry on breaking back up again. So if you never got in on the start of the run, I mean, I've got in around this area here. I bought gold around this area here as well. I have. So for me, I'm not too bothered. But obviously, if you have missed this run, then unfortunately, it may be a case of just sit back and let it run and look for other pairs itself in general. So now going to the US oil, for example. There we are there. I actually had this thing quarterly break and reset the 20-year trend line. So this trend line's began for like ages, well, for the last 20 odd years or so. And what we got here now in the monthly chart at the moment is this monthly 50 MA has been quite strong. Breakdown, come back up. We did break above this trend line and the monthly 50 EMA, but if you just do your Fibonacci pullback on the whole entire move, it is a 618 pullback as well, so that's breathing. It's trapped here, and all of a sudden we're now stuck within the monthly 50 EMA again and this $60 level, which is quite significant as well. Bear in mind, we've got 1, 2, 3, 4, 6 touches of this level now. So what I've done now, just to give you an example what I'm expecting next, I would expect oil to break down, but not just until it breaks down this upward sloping trend line. This outlines the recent lows of the noughties, well, 2016, 2018. So if we do break down there, break and retest, then you sell there. That would be quite nice. There are some sell opportunities to come up as well, but we're looking to at some other time. Now there are some other pairs on a lower time frame look quite good, but again we're not going to look into that. This is the S&P 500. Doesn't give you too much information, but again you can see on the Dow Jones we are slowly grinding up. We are, but if you see here, MACD's it's got MACD bearish divergence. And I just feel that we are going to move down into some form of recession across all the markets, not just the US, for example. We have the FTSE here, and the FTSE has been struggling. Actually, that's a lower high there for me, for an example. So I do sense that we are going to break down eventually. And then I do think 6,000 would be the ideal figure just to come down to once we do break down this monthly 50 MA properly. So it's something we're keeping an eye as well. Some of the pairs that look quite strong this month or next 2 months is the Kiwi and the Pound, believe it or not. So this is a long-term upward sloping trend line. We broke down quite significantly, but a pull back up on the Kiwi back up to 65 from 63 would be quite viable. If you then look at the daily chart there, we haven't changed trend as such, but if we just move down slightly, make the inverse head and shoulder pattern, and then rally off afterwards, that could be quite a significant way of looking at things. And again, if we just put this level around here at 64, 64.5 pretty much. That is 64.4, something in that area there, and you can see already that's been a key level in the past. So realistically, I'll be expecting at least up to 60, well, around 64. So it should touch the daily 50 MA at least. But I think personally, a little move down, inverse head and shoulder pattern, then move up afterwards. So that's the Kiwi itself against the dollar. I think that highlights how bad the dollar is in general, really. You got a very similar model with Kiwi CAD. You're at a key level there of 83, so it looks like you may move up there. Kiwi Swiss a bit dead at the moment, and Kiwi Yen gives you some form of example as well at the same time. So the Kiwi does look quite strong that way. Then also the pound itself. So the pound on the monthly chart has made a double bottom pattern at 1.2 and looks as though it wants to head up higher now. So if you look on the weekly chart, let's move there for you guys. You can see again, this is a clean pattern there, just like that. We've moved up and come back down again. So what we're looking for now really is some form of test of this double bottom pattern. It's a very messy one. You could say you've had it already. So for me, any close above the daily 50 MA would be enough for me to most likely enter as a longer term trade. So you might get a trade like this here, like that. Something like that would be my stop protection, my entry point there. And then I'll go back to the monthly chart. Where do I think it go up to? Let's have a look. Well, I do believe the monthly 50 MA would be quite a significant target to aim for. So go to the recent highs there. It's only a 4% trade there. You could put a bit more risk in that one as it's a 200 pip stop there. Quite a safe trade as such once you get the confirmation of the trend change. However, there are other trades that do look a bit better. Pound yen, for example, looks very nice. It's a nice monthly chart there. A good double bottom pattern recently. You do have significant divergence on the bullish divergence there. RSI is at 0, so it does look quite good there. If you come down to the weekly chart now, you will see again it's moved up and just popped back down again. Again, the RSI was at 0 for a little bit, so it looks like it could go up a bit nicer than that. Bit of deceleration last week, and if you come down to the daily chart, we do have this kind of possible double bottom pattern here. So a double bottom pattern there with it could come down to this alert here of 130.5. If not, if you start getting a trend change now, it would be quite nice to look at. Take a trade long there as well. I think again that coincides with a lot of pound pairs as well. So just bear in mind, ironically enough, pound looks quite strong there, and you can see it also with pound Swiss. That's a very similar story. Double bottom pattern. I did actually take a trade off the very bottom there to start with actually. There is your daily chart there. For me personally with this one though, it's just moved up. I don't like trades like this. I like them to breathe a little bit better than that. There's not the greatest trades to take at the moment. I know it's a break and retest of the daily 50 EMA. For me, it just doesn't feel, I don't have that much confidence there. Again, you see the Aussie looks like it might be powering up as well there against the pound. So that's why I'm just a bit dubious about doing that one there. However, Euro pound for example, I do believe a pullback up to 90 will be very nice. So if I just move up to the monthly charts for you guys again, so you have a little quick look at that. Got a nice key level at 90 there. We have got these wicks going higher, but they keep breaking back down again in the range. If you look at the weekly chart now again on this one, again, a pullback, a move up to 90 would be significant. Multiple tests there. And then if you go back, obviously back to the daily again, you can see that that would put a nice clear lower high in. Depending how you want to draw your Fibonacci here, so if you want to draw your Fibonacci from this candle, it's a 382. Some people want to draw it from this candle, and that would mean just above the 382 there. So either way, it's a 382 pullback, which is part of the Fibonacci sequence, which is quite nice to see. Again, so a move up now, a weakening of the pound now would be quite nice at the moment. See this move up to 90. test 90, give us some signals here, like we got here for example. We had some rejection candles, and then we just broke down eventually at the end, so hopefully something like that could happen again. Again here, the head and shoulder pattern, bump, bump, bump there and break down. So you need to see a confirmation there, but RSI is clearly creeping back up to 100 again, so that does give me some confidence. Now let's look at the dollar this week. So the euro itself, I'm just going to draw a little trend line here. That is your trend line. If we break above the trend line and the daily 50 EMA, we would have a trend change as such. The only problem with that is we're always consistently waiting for that. We are. MACD has flatlined at the moment here, where we're making lower lows here, so you could say it's some form of divergence, not the strongest, but it is still there. If you look at the higher time frames here as well on the monthly chart, you can see obviously RSI is at 0 again. It's maintained at 0. We're just getting these slower candles again. We still need to wait for the trend change. I can't really emphasize that enough to you guys. You have to wait for the trend change. And again, we're going to look at the DXY now quickly, and you can see DXY has a little bit more to go to 100. 100 is very, very key here. So I would possibly expect this trend to keep creeping up to 100, and then we see a big breakdown later on. The weekly chart doesn't give you much whatsoever. You've got the weekly 50 MA one side, you've got this creeping up all the time. It hasn't really actually had a trend change as such. It's struggling, but it's still above this daily 50 EMA, and that is keeping the dollar stronger at the moment. So any break and retest now of this would be significant. I did expect one here, and we did break down again there, so we had some sell off there, but it has raised back up again. So we just need to see if we get some decent some patterns as such. And the last pair I'm going to look at is Aussie dollar. So obviously, me being the reversal trader I did buy in this candle at the end of the day there. This was my that was my trade like that, something like 45 pips. I haven't got a exit point at the moment on this. Just going to see how it goes. Going to try my stop every few days and see what really happens from there, really, guys. So this one here again, though, if you look at the higher time frames, you can see the weakness again there. You got this really kind of strange super high test slash reversal candle, and you got this is then the next monthly candle forming. If you look at last week's candles as well, you can see a little middle bottom pattern, super hot low test again. So what I'm expecting now is some move up now, pretty much, and go from there. I would like to see a move up to 70 on the weekly chart. Just test this weekly 50 EMA. Would we get there? Well, if we do start seeing this breakdown on the dollar, it would be quite a thing to see. But however, I do think up to this trend line is definitely going to happen. So on the daily chart, I would expect to at least get to the recent highs of 687. And just to show you what that looks like, as my last bit again. $687, and there you go. So you're looking for a 3.5% trade there. So that's roughly what I'm looking for at the moment. Happy to leave my stop where it is, below the lows of everything. If I get stopped out, I get stopped out. But hey, what can we do? Okay, guys. So I hope that helps you this week, and look forward to speaking to you soon, guys. Take care.